What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. Between the end of last week and Monday, around $245 million went into cryptocurrencies, with 80% of the money going into Ethereum. For the week, Ethereum saw around $195.1 million of inflow, while totaling $260 million year to date. Bitcoin, on the other hand, saw $41.9 million for the week and $2.02 billion year to date. This was caused by CME allowing futures for Ethereum, allowing it to be more accessible to big money. Ethereum for the day was up 8% and ended the day at $1,737. I believe that this move in Ethereum was mostly caused by Tesla announcing Bitcoin as an investment. But CME announcement is not that bad, as it will further allow cryptocurrencies to be adopted by mainstream Wall Street. On Monday, it was found out that Tesla purchased around $1.5 billion of Bitcoin. This was found out when Tesla's 10K filing was released, and it stated that Tesla will be investing their excess cash reserve into different assets. Bitcoin's price went up 10% in the morning, where it was hovering around $44,000. This news really isn't surprising, as the dollar has been falling ever since the Fed has introduced quantitative easing. I also believe that other companies will be following suit, as it seems like having a large cash reserve isn't really the best play right now. This will probably cause further increases in Bitcoin, which could easily cause Bitcoin to double in price. On Friday evening, it was announced that Hyundai and Apple will not be making an electric car. Hyundai stated that Apple was in the process of asking many companies, and that the reports that were released in the past months were getting ahead of themselves. This caused Kia stock to fall 15% for the day and Hyundai to fall around 7% for the day. Apple opened red but closed pretty much flat for the day. From this, I suspect that Apple will not be doing any business with Hyundai, as Apple does not like doing business with people who leak their talks. On the other side of the coin, nothing seems to be changed with Apple's plan on trying to enter the electric vehicle market, as it seems like they are shopping around to see which auto manufacturer will be willing to make their cars. On Tuesday, Canopy Growth CEO David Klein said that the company is working with the members of the U.S. government on the legalization and distribution of weed. They are looking to expand to the U.S. as the U.S. government is controlled by the Democrats. Democratic senators like Chuck Schumer, Cory Booker, and Ron Wyden are pushing for the federal legalization of marijuana. The earnings call sent Canopy Growth up 11.90%. Other stock companies are up a significant amount as well. As for my opinion, I'm pretty sure that I'm late to this trade, as there were already significant moves. On Tuesday, GameStop fell to $50.31 while AMC fell to $5.50. GameStop short interest fell to 50% from 130% on Friday, meaning that most of the shorts have covered their positions. This seems to be an appropriate article to sum up the GameStop short squeeze, as it looks like Reddit and many news outlets are calling the end. The posts of GME on Reddit seem to still be popular, but there's a noticeable decrease in hype. I FOMO'd into this trade sometime last week and lost $500, which wasn't so smart, but I believe that the trade would have worked out if multiple brokerages didn't halt trading. Overall, I think this is still a messed up situation, but in the end nothing will even change, as the SEC could care less about retail traders. Wrapping up Tuesday, I thought that this article really articulated what I've been seeing in the past months with Elon Musk's Twitter. I've been following Elon Musk's Twitter for a while now, and I've noticed, and so did many other people, that Elon likes to tweet his future moves. For instance, months before Tesla even announced buying Bitcoin, he was talking to Michael Saylor about his Bitcoin purchases through MicroStrategy. He was asking Michael Saylor if large transactions on Bitcoin can even exist, and Michael Saylor said that they do, and he'll be willing to show them. He then flies to Hawaii toward the end of the year to talk to Michael Saylor. Furthermore, his most previous Twitter handle was #Bitcoin, which further hints his move into Bitcoin. Basically, his Twitter is full of shitposting, but if you're able to filter through it, it may allow you to profit. On Wednesday, Jay Powell spoke. He spoke about the importance of the Fed not tightening monetary policy, even though the financial markets seem to be doing pretty well. He believes that the Fed must continue its flexible monetary policy, as unemployment non-farm payroll rose last January. Furthermore, he stated that unemployment rates should be closer to 10%, which is still higher than pre-pandemic times. This meeting did not provide any significant information, as Jay Powell just reiterated his stance on providing a flexible monetary policy. On Wednesday, oil futures was up for its 8th session. The rise in oil is due to the EIA stating that the domestic crude stockpiles was down by 6.6 million barrels. As you can see, WTI is up a significant amount for the past month. This rise is mainly due to the OPEC meetings that happened a few months ago where they decided to limit oil production. Now with the news that the US is also having limited supply of oil has risen significantly. It should be interesting how this all plays out as rising commodity prices may pressure the financial markets. However, with rates so low, both the financial markets and commodities can rise. On Wednesday, yields went lower as it fell 2 basis points to 1.137%. This caused the dollar to slide and make a 2-week low. Furthermore, the Fed meeting that I just described, Powell remained his stance on leaving the monetary policy flexible till unemployment levels drop and inflation stays above 2%. The DXY ended the day at $90.43. We see that it has been making new lows since last week. The dollar falling has caused stocks to rise as the S&P 500 is almost up 100 points from last week. Overall, nothing seems to be strange as the market is acting appropriately to a low interest environment. On Thursday, Bitcoin hits a record high of $48,297. This means that Bitcoin is up 60% since the start of this year. The rise in Bitcoin was mainly due to BNY Mellon creating a new unit within its bank to allow the clients to hold cryptocurrencies. This further shows banks and other mainstream hedge funds showing their support for cryptocurrencies. At the time of recording, Bitcoin is at $47,178.90. Overall, I like this news because the majority of my investment portfolio is in cryptos ever since October. Hopefully the climb continues upwards. We had rumors that the G7 will be introducing a new IMF SDRs. An SDR is basically funds that were made by printing money. Currently, the US has the most say in this as they're the IMF's biggest shareholder. The Republicans are saying that these funds can be given to China and other countries that may have sanctions put onto them. However, the Democrats state that the sanctions put on them will prevent those countries getting access to these funds. Putting the politics aside, this once again confirms that banks in many countries around the world will continue to print money. With an easy monetary policy promoted everywhere, the financial markets will continue to rise. The biggest U.S. home builder group is asking Biden to lift the import tariffs on Canada. U.S. lumber has risen greatly as it has doubled in the past year. Lumber has been rising due to lower interest rates and Americans demanding to live in houses during the pandemic. With lumber costs on the rise, identically sized homes have doubled in price. Overall, I believe that the situation is pretty bad. With the government printing tons of money, the housing market has been the ideal place to keep your money. This caused the housing market to rise, and with lumber shortages due to COVID, it just makes things worse. Hopefully, the housing bubble will pop soon as this growth is unsustainable. To wrap up Friday, the volatility index went below 20. This is the lowest since February 21st, which was before the coronavirus. Analysts see this as pretty bullish price action as stocks rise and the VIX falls, and this means that people are more confident in the stock market. I found this article to be pretty interesting because when the VIX falls below 20, we usually see a spike up as shown in this image. You can see a spike up in June, September, and mid-January after the VIX made new lows. It should be interesting what kind of event will trigger the VIX to rise. So what are my thoughts on this week? Nothing seemed to have changed from last week as the Fed has once again confirmed a loose monetary policy. Due to this, stocks and commodities are flying as usual. Other than that, I guess I would like to see more companies flow into Bitcoin so I can profit nicely off the resulting moves. Well, that's it for me. If you like this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out on any future content, press the subscribe button. Thanks for tuning in, and I'll see you around next week.